As investor attention is focused on the US, where expectations for growth are already high and rising, some are beginning to wonder where the upside surprises may be. In our view, investors would be well served to look abroad in Europe. Now, why do we think Europe might be the source for some positive surprises? Let's break it down. First, let's be clear. There's no doubt that the European vaccine rollout has been a big disappointment, from the slow approval process to the logistical headwinds. The fourth wave of COVID has hit Europe with the consequent shutdowns and mitigation measures. What you may not know, though, is that European economic activity remains resilient in the important manufacturing sector, buoyed by strong export markets. And with the US economy gaining momentum and China's GDP accelerating to grow over 18% year over year in the first quarter, this bodes very well for continued strength in exports. But as investors, we're not buying the economy, we're buying companies. There, the news is also very good. The European benchmarks have high exposures to the cyclical areas of the market and very high exposure to revenue generated outside of the Eurozone. It's all relative, and relative to US benchmarks, the European stock market is more leveraged to the global economic recovery. We expect that earnings growth for Europe will outpace the US this year. Second, although we'll get to see the approval and ultimate impact of the €750 billion recovery fund, the ratification process is currently stalled by the German Constitutional Court. We believe it will ultimately move ahead after this delay. In the meantime, many member states are moving ahead with their own recovery plans with funding over the summer. This fiscal tailwind will join an extremely dovish central bank, where ECB President Lagarde has expressed resolve to maintain accommodative monetary policy until substantial progress on both the growth and inflation fronts is met. Policy rates are already negative, and we anticipate will remain so. And last, the vaccine news after the challenging start will get better. We're already seeing a dramatic ramp up in the number of jabs across the continent, with well over 15% of the eligible populations in Germany, France, Spain, and Italy having received at least one dose. This will allow a more durable reopening and a relaxation of some of the strict mitigation measures, and that will allow a services sector rebound. So what does it all mean? Now is the time to be sure your portfolio is properly and globally diversified, including exposure to this European equity recovery story.